Florian Grummes from MidasTouchConsulting.com is back once again to talk about gold and silver and the sideways price action that they seem to be in once again. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Florian Grummes, welcome back to Metal Money. How are you doing?
Hey, Patrick. Thanks for having me. I'm doing good.
Glad you're doing good and glad you had time to revisit us again. Got to ask you straight off the top, what's going on with gold and silver? Gold continues to struggle holding the $1,900 level, and silver just cannot seem to close above 28. What is preventing both metals, gold and silver, to hold these levels?
I think it simply takes time. I mean, we had this nice double low in March in the gold market. And since then, we had a actually nice big move up, $240 in gold over the last 2 months. So I think it's normal and natural that it takes some more time and that the market needed a breather last week was also kind of obvious. I'm actually impressed by the strength, how fast gold came back on Friday due to the rather disappointing non-farm payrolls. And actually, I expected a bit of a deeper pullback or also a longer pullback. And now here we are back slightly below 1900. I think it looks bullish. I think the market wants to move higher. So I just published my latest gold analysis over the weekend. And I basically see the two scenarios. The one would basically mean a continuation of that pullback from last week. And the other one would be, probably an escalation towards the upside, towards midsummer, and a push towards the $2,000 level over the next 2 months, because gold is still bullish. So I think it just needs more time.
Okay, yeah, that leads me to my next question, where I was going to ask you which seems to be stronger right now, the resistance levels where a stronger resistance will continue to push down the precious metals price, or are precious metals actually strong where an ongoing consolidation is indeed building and will ultimately break through that 1900 for gold and $28 for silver price level?
I think the probability after that fast comeback on Friday has certainly increased. And now, start of the new week, it also looks like gold wants to run again towards this $1,900 level. And basically, all it needs now is a close, I would say, above $1,905, $1,910. That would, for me, be the confirmation. Yes, gold wants to continue this rally directly, wants to move higher. And then the next target would be 1950, 1960. That's the resistance where it failed in early January and also last November. You remember we had those two big sell-offs right at that resistance number. So I would imagine that this resistance is still there. And so maybe at 1950, 1960, gold will need another breather. But I also would say then that this recovery that started on the 1st of April probably will gain so much momentum in the summer that gold then can push directly towards the $2,000 level. And seasonal wise, over the last 5 years in this new bull market, we always have seen strength in June, July, and August, and then a pullback or a correction in September and October, even towards November. So that is not the typical pattern if you look at gold over the last 53 years, but over the last 5 years it is. So currently, my thinking is more and more shifting towards this escalation scenario until midsummer. And that would mean, $2,000 in gold and certainly a break of the $30 in silver at some point. And that's going to be very interesting then.
Okay, you mentioned the word momentum. Do you think momentum is enough to get gold and silver past those two levels, or are we going to have to see something else to see gold and silver get past those levels and maintain those levels?
Well, I mean, momentum is always building up or basically diminishing, right? And it depends, of course. The main driver is always what the market is doing, and rising prices always create more momentum. So you have seen that in the cryptocurrencies over the last few months. In the beginning, nobody or just a few people were interested, and then after prices have been rising and rising, everybody was interested, and it was the talk of the town. And something similar we've seen last year in summer in the precious metals. So I wouldn't be surprised if gold now, after $240, maybe gains another $100. Yeah, then of course people will have a much more closer look to gold and will be much more interested in again. And from a fundamental perspective, I think, yeah, inflation expectations continue to rise, and that is definitely positive for precious metals, especially for silver.
Why do you say in a recent commentary on your website that silver time is on your side?
If you invest physically in gold and silver, you don't have to be afraid of anything, and time is on your side. You can sit through those volatile times, you can sit through those sell-offs, through those waterfall corrections. You can just sit on it, stacking it and sit on it. And time is on your side, because we all know that this financial system, the fiat money system, which is ruling the world, it's not sustainable. It's nobody knows how long it can still continue, but it is not sustainable. And we all know that at some point it will fail. It's just a question of time. And if you own physical silver and gold, the time is on your side. You just have to be patient. That's basically what we wanted to express with that headline.
Many people who see the value of gold and silver often ask, is there any good reason for markets to sell off precious metals right now when fundamentally it's really not the time where one should be selling precious metals?
Yeah, it's this old discussion, but people need to understand that precious metals are still made of two different types of markets. Huh? The physical precious metals market, certainly there's no need to run to your dealer and sell your physical gold and silver just because gold is dropping a few dollars, or maybe 10, 20, $30. But the paper markets, that's where most of the speculation, of course, is happening. That's where people trading with leverage and with huge amounts of money on credit, on margin. And that is basically the market that dictates the price in the short term. And these are two totally different things. We know that for every physical ounce of gold, there are at least being traded 200 paper ounces of gold, and it's a similar ratio in the silver market. People need to accept that it is still there, and it's not only that there's big market players who manipulate it, but it's also all these little guys who all also trade. Most of the precious metal bucks are not only buying physically, but they also like to speculate a little bit, and then they start trading, buying mining stocks, or even go for CFDs or futures or mini futures, whatever. Yeah, and this is all part of the whole thing. And yeah, and then you get these kind of like profit-taking events like last week, and then people raise their stops, and then suddenly it becomes a waterfall, and then quickly the people who basically were having too much leverage on their positions are being forced to liquidate, and then suddenly, yeah, you get these $50, $60 sell-offs, and we haven't seen one of those for quite some time in the gold market. So they have always been there for the last 20 years. So what I would like to show you is a typical pattern that I have seen in the gold market, especially in the bull market between 2001 and 2011. And I think that we might be in exactly the same setup right now. So what we have here is a monthly chart for gold. There's nothing besides the candlesticks and a slow stochastic indicator. And it goes back all the way to 1999. So this is the start here for the bull market, the first one between 2001 and 2011. And every time you got these sharp spikes like this one here, or you got this one, for example, you also got this one here. The market came back down. Every time this was a new high, especially here was a new all-time high. And then here, of course, there was the final top of this first part of the bull market. But here was a new high, you had it here, and you also had it here. And every time the market came back down rather sharply, something similar we've seen over the last 9 months, since last August. And then rather quickly, the market came all the way back up to not exactly the top, but slightly below that top. And if we go now to where we are today, so this was the move up, We had this long 9 months correction, and now the market is coming back up. And I assume that gold will right now, with this recovery wave, basically attack those $2,000 level somewhere here, and then we probably get a pullback, probably back to the 200-day moving average, attacking that horizontal resistance zone here around the 2000, 2025, $2,050 level, attacking it again, another pullback, but again higher lows, and then at some point it will break out, and you have this ascending triangle, and you had those ascending triangles many times in the past, and I believe that we are in for something similar at the moment, and that's why I think there's a pretty good chance that gold will actually escalate over the next few weeks and months, probably towards mid of August or end of August. I could imagine that gold will reach back to these $2,000, $2,025 level, and then we might get a larger pullback. So that's basically my my expectation right now, or my preferred scenario.
Okay, we appreciate you showing the chart. Now I completely understand why you were saying be patient.
Right. Yeah, you just have to be patient. I think gold is coming back from this correction. 9 months, it was a healthy, necessary correction, but everything points to higher prices. And at some point, not maybe within this year already, but latest by early next year, but it could also happen this year already, that we break out above this $2,000 level. You have to remember, we are in a cracker boom. Things are accelerating. We are getting more and more exponentially in everything, right? The money printing goes faster. And also the markets. We see more and more volatility in many sectors. So I would be surprised if this bull market is going to be strong over the next maybe 2 months. Then we get a pullback somewhere in September, October, and then another attack, and maybe the breakout end of the year, early next year.
Okay, so that short-term breakout, you're looking again at about what price point for gold and for silver?
For gold, it would be around the 2000 to 2025-ish kind of range, I guess. And of course, on the way to that number, we have this 1960 strong resistance level as well. So it could take some time. And yeah, if gold managed to move to that number, well, I think silver would be probably breaking above this $30 level. And it could rather quickly run towards $35. I wouldn't be surprised in this first breakout. Then a pullback, testing this $30 level. And this test might be then happening somewhere in autumn. If the $30 level holds, then silver would be ready to run towards the $50 level in the next rally. So yeah, I think any pullback in the precious metals is a buying opportunity. We need to buy the dip. If you buy it physically, you don't have to be afraid of anything.
All right, those are some very good words of encouragement. Florian Grummes from Midas Touch Consulting. We appreciate the time you've given, and I hope we can do this again soon.
Thank you. You're welcome. Thanks, Patrick.
There you go. Patience is the virtue every precious metals investor needs to have. As always, please leave your thoughts in the comment section below, and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.